Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello guys, let's get straight to it. Price moved further down into the next level. Last time, we marked out these levels, the SR level on the lower timeframes and the midpoint of the yearly candle as the target for the yearly SFP. First of all, these levels are being hit very fast in terms of cycle timing. This area here, maybe even slightly below, is usually where bear market lows form based on price. And Bitcoin is already reaching these levels at the beginning of February, which is clearly quite early. So now we have to see what kind of situation develops from here. Either Bitcoin forms the low faster, we get some kind of relief rally, and then build a bigger structure on the lower timeframes, or price moves lower, as many expect, and starts breaking some metrics, which I'll show in a moment. For now, the target for the yearly SFP setup has been hit. On the lower timeframes, this happened right after my idea of moving higher from the previous range was invalidated. So on one side, yes, I was wrong about the move higher. But on the other side, once the idea was invalidated, price moved much further to the downside, which for me confirms that the invalidation level was good. Anyway, what we had here was a yearly SFP, and for that scenario, we were looking at the midpoint of the candle that was taken out. As confluence, we also had several other levels lining up there. So all in all, I wouldn't say I'm surprised by this move down. I'll show you a clip from January in a moment where I already talked about this move. For me personally, I wanted to see higher prices first before jumping on the train. And I wanted things to align for my setup, metrics and statistics included, which is exactly what I showed in that clip. Bullish, then we simply see continuation higher. In the bearish case, that's the point where I would like to see my stats increasing and metrics showing top signals, all happening inside the time window. Then we would see a move down, breaking this area, and I would target at least the mid-wick of the lower part. If it's even more bearish, then of course lower, with data lows currently still around mid-40s to 70K. In that case, the move up would just be the formation of the yearly high. So as you can see, I was ready for this move. However, my higher target was not hit, and my tools and stats did not show a typical top formation, so this move down happened without me on board. That happens, and it's not nice, of course, but we move forward. So once the higher timeframe target was hit, we can ask ourselves, what's next? What's next if price moves lower, for example, or higher? Now for the lower side. This is currently support, of course. And yes, price can retest it or even take it out one more time. But what we don't want to see is lower timeframes, like the monthly, quarterly, or even weekly timeframes, starting to trade below this level. If that happens, then the next yearly level would be this yearly level with the wick here as an area. And of course, the yearly candle itself, because it's important from a price perspective not to close below it. That's the big level. Whether these levels will be hit or not is another question. Just because the levels are there doesn't mean there is a high probability that it will happen. But as we know, low probability events can still play out. So for now, these levels are not really relevant. But if we see this area getting lost, then they become relevant again. You can see this area is around 48K to 46K, so there is also some other confluence around these levels. But for now, we go step by step as always. The big level was hit, and now we look here for a bounce, or at least not losing this low if you are bullish. If you are bearish, then yes, you want these levels to break down. Anyway, for me, I will observe now if price is able to reclaim the previous range low, which is the previous yearly low. That would be an interesting level. If not, then we have to see what comes next. Maybe a range and another attempt to come back inside or a new low. For that, we need more information, and we will observe this on the lower time frames. But before we switch to those levels, I also wanted to show the power law chart, because if price would move lower, then we would have to look at this chart, since historically, that's where we've seen a low or a high form. So what we can see here is the power law chart. What we were looking at here was the top of it, the mid, and the bottom. Now, based on history, we can see that this time price did not make a move above the midline, which led to a top that we don't always see in a classic way. After that, we saw a rejection, and now price is moving towards the lower part of it. As you can see, historically, this has been a really good area to look for setups. So far, this was the bottom every time, or at least very close to it. With that said, this will be one part of the puzzle where we will observe what price does next. For example, if this metric does not get broken, and of course we can't expect anything unless it actually happens, then the low should form somewhere between where we are now, or in the worst case around 54K to 52K if price moves down from here. With that, price would already touch the usual bear market low prices, at least based on what we've seen in the past. This time, as explained, we are far ahead in time. Usually, price would chop down and we would see the price low around the end of the year, which would then logically start rising. Many people don't know this, but yes, metric bottoms are rising over time, at least on some specific charts, and they are really useful for identifying bottoms or tops as long as they hold. So here we can see that if price moves further in time, the low will also slowly rise, which brings me to a few ideas. One idea is that we form the bear market low around these prices here, maybe with another move down to hit the metric bottom, and then we actually see a rise or a grind up along this line. It doesn't have to be a grind down, it can also be a move up. Then, near the 4-year cycle time window, we would just see another move towards this level. Of course, everyone would then expect a lower low to be made. But if the metric does not get broken, then we would actually see a higher low, which would surprise many people. And if we know that the floors are rising until proven otherwise, then this early move down this year makes total sense to me. It would explain why maybe we hit these levels earlier, because as time passes, the low is rising, and people don't want to buy later at a low that would be 10K to 15K higher, cap like we've seen in previous bear markets. You can see how price slowly moved down and then reached this level. This time, it would make sense to me that they might say, let's make this move early and buy cheaper. And later, when everyone expects a new low, based on this metric, we would actually see a higher low into the 4-year cycle time window. Technically, that's fine, because the low has deviation and a big window where it can form inside the 4-year time window. Anyway, these are just a few of my ideas for now, trying to explain to myself why these moves might happen so aggressively and so early in the year. Maybe I'm wrong. We shall see. But all I know for now is that I want to see how we move further and whether this power law chart holds. Because if it holds, then my idea at least has a chance, or makes some sense. And maybe we'll see the next run that doesn't look like all previous runs. Maybe longer sideways action or an explosive move. Who knows? We shall see, and you can judge for yourself. My job is to show these things so you can judge on your own. Now with that, we switch to the next chart, which is also a higher time frame view. What I marked out here is simply the previous tops that led into a downtrend. First of all, we often hear people say that a bear market always retests the previous bull market top. But that's mostly said by people who haven't really looked at the chart beyond the last bear market. Because if we look at the full history, we can see that the first time price did not retest the high of the previous down move, the next one also did not retest the high. And only the last bear market actually retested the high of the previous bull run. That's something I was wondering about for a long time when I kept hearing this statement. I always thought I was looking at things the wrong way. But no. I think it's more likely that many people just don't go back on the chart and test these things for themselves. I think there was someone who once said that every bear market retests the previous bull run high, and then everyone just followed that idea without actually checking the chart. And honestly, that's kind of crazy because I've heard this from a lot of people. It's a good example of why you should always test things yourself. Anyway, here we can see that 2 times price did not test the previous high. The last bear market did, and now price is doing it again. And based on history, yes, history is only one sample good joke, right? This is the level we would like to see holding. What I really want to say is that this is clearly a big SR area, the retest of the previous bull market top. And not only that, it's also retesting the 8-month consolidation that price spent here. It's a bigger area, of course, but on the higher time frames, it's clearly a zone that should not be ignored. This is the area where we would expect to start finding support, because if not, then I wouldn't really call it a retest of the previous bull run highs anymore. That would already be moving much deeper into the last bull run phase levels. So this is clearly a level to observe. And this also aligns with the power law chart, where the lows would be around this area. That gives us extra confluence. That doesn't mean we can't have a wick down or longer chop here. Sideways action is definitely possible. But the expectation would be at least a move higher, some kind of bounce from here, and then we observe what happens next. Now we switch to the weekly time frame. Here we can see price hitting the level and producing a bigger bounce. That bounce, of course, leaves a wick behind. What we can do here is mark out the midpoint of that wick and see whether it aligns with any important levels. The reason we do this is that bigger wicks often get filled, at least partially. Not always, of course, but it's good to be prepared and check whether there are any levels lining up. So we take a simple Fibonacci pull from the low to the weekly close, and we can see that the midpoint comes in around 65K. This is just a fib pull, so it's not a level to the dollar, just the 50% retracement. In the best case, we have some levels in this area that can help us judge whether this level would hold if a retracement happens, or whether we maybe see the full wick getting recovered or price holding at the first local support instead. On the higher time frame, we clearly have a broader area, but on the lower time frames, we need to see what actually needs to happen to reach these levels. With that, we switch to the local levels. On the weekly time frame, for now, we've seen a nice buyback and no closes below this first level. The next weeks will decide whether we range here for longer or get a bounce. For example, if we see this week closing lower and then the next week also selling off, then it clearly opens the door for a range here, at least as long as none of these levels break decisively to the upside or downside. From a time perspective, we had marked out this 202-day cycle, and we are now inside that time window, with the midpoint around the start of March. By the way, on momentum, we can see that Bitcoin needs a close above 69K to cross up. That's more or less where price is right now. Currently, there is some bullish divergence, but it's not confirmed. So if price does not close this week above 69K, then this remains either down or sideways pressure. Here on the daily time frame, we have a few clear levels. To the upside, there is this daily order block, which has confluence with the 4-hour market structure and is also more or less the previous range low area. That makes it an important zone to watch later, either for a rejection or for signs of strength if price manages to reclaim this level. This level becomes relevant later, and we'll come back to it when price actually interacts with it. To the downside, I marked out a few levels inside this range. One is the level we are already bouncing from, and another one sits lower in case this level does not hold. If price moves lower to that next area, it would align very well with the power law lows around the same zone. So that would be a big confluence area, unless the metric gets broken, which is not something I can predict. For now, price is bouncing from this level, and this is the current low. And if we don't see a V-shaped reversal from here, which is rare on Bitcoin, even though it can happen, but we can't expect it until it actually does, then my main expectation would be some kind of range. That's what I'm looking for right now. We have a low, a nice bounce, and price is now hitting the first resistance area. So if I'm looking for a range, I focus on resistance areas. If the first one holds, that's fine. If not, then we move to the next one, because maybe it's a bigger range or a move with higher lows or higher highs. That still needs to be seen. If price forms a range here, I'd like to be involved from both the lows and the highs. Over time, we'll get more data. With this range idea in mind, we can now move down to the lower time frames. Before that, a quick look at momentum. Daily momentum has crossed up, and it remains up as long as Bitcoin manages to close above 62.7K. That's basically the last daily level here at the lows. Unless that gets lost, momentum stays pointing up. That doesn't mean price has to move straight up, but if momentum is up and price is not breaking to the upside, that often favors a range. That said, this is still very fresh. We've just put in our first low and are now more or less working on the high of this move. We'll observe this over the week. The levels are clear for me. If price is not able to break the local high above, then I'll look for a move lower within the range. Whether we get a higher low or come all the way back down to the low and form a different range, we'll see that later. With that, we switch to the local levels. So here, a few things are going on, and I'll try not to confuse it too much. For now, what you can see is a potential range. As I said before, we don't yet know what kind of shape this range might take. It could be a clean, horizontal range, it could be a slightly sloping one, or price could still surprise us with a straight move up or down. At this stage, we simply don't know. What we do have right now are two clear points, a low and a high acting as resistance. These define the possible range boundaries for now. In a range environment, the best setups usually appear closer to the 25% retracement and 75% retracement, as well as around the 0 and 100% fib levels. These are the areas where we look for triggers or changes in behavior that allow us to manage a trade properly. From there, it's always step by step. If you're long from the lows, you take profits on the way up into the range. If you're short from the highs, you do the same on the way down. And in the case where you're lucky enough to participate on both sides of the range, and eventually one side breaks out, you can end up holding at least one nice runner. If price comes back down to the low or up to the high of the range, and you see a setup forming there, or you believe based on your analysis that it's a good level for a potential reversal, then you either add to the existing trade or open a new one. That depends entirely on your trade management and risk rules. Then you repeat the process. That's the basic range idea. From there, you adapt as new structure forms and as price gives you more information. If I switch through the lower time frame momentums, a few things stand out. On the 6-hour, momentum is still at the top. There's no cross down yet, and for now it's not very useful because it can also stay there for quite some time. On the 4-hour, we do see a cross down. Price would need a close above roughly 71K to 72K, which is where price got rejected. As long as we don't see a close above that level, there is downside pressure. That said, I also need to mention the alternative case. Price can still make a new high, but then form bearish divergence. In that situation, we need to see whether price only SFPs the high or whether it reclaims the level and then loses it again. If it loses it, that opens the door for a trade back down to the next levels. If it holds, then the focus shifts higher to the next resistance. On the 1-hour, momentum is also down as long as Bitcoin stays below 70.7K. Putting this together, the area where price is currently rejecting, what I marked as the potential range high, is the key level for the local structure here, and therefore a good invalidation level. That's why I opened a short yesterday. I entered with 3 entries, split across different areas. The first entry was on the move here, because I saw divergence starting to build with Ethereum. The second entry was where I would allow an SFP and add to the position. The third entry is mainly for confirmation if price moves in my favor. Right now, I don't want to add anymore. I'm only managing the trade. The trade has already hit TP1 and is now moving toward TP2. After TP1, the trade was already at break even, so technically I didn't need to move the stop. But just in case price moves up again, I'd rather secure some profit than look for a new trade. So I moved the stop a bit lower to lock in gains if it gets stopped out. The next TP is below the weekend lows, which often get taken out, so it's a good level to take partial profits. The rest would be a runner, similar to how I manage longs, where I'd then look for the next TP lower or higher within the range. Now, remember the weekly wick we marked earlier. That's in the lower part of the range. That area aligns with the higher timeframe SR level, and that's where I would look next for new setups, the lower part or the low of the range. If price instead moves higher, the runner benefits from that as well. The same logic applies on both sides of the range. For the next short idea, the resistance level above is still valid. If during the New York session, price trades into that area and shows weakness based on your analysis, like an SFP or a break above and loss of the level, then I would potentially look for another short. If there is no weakness, then I simply wait for the next level higher. So to summarize, The yearly target has been hit, the 50% of the yearly candle, an important area with multiple confluences. In the same area, we have the power law lows, which historically were very useful for identifying bottom formations. For now, we've seen a strong bounce, but we still need to see a range develop. Otherwise, lower levels toward the power law lows remain possible. This is all happening very early in the cycle. Either we form a range now and later in the year, see a higher low, or the metric breaks, which so far has held for a long time. One of these will happen, and will adjust if needed. For me, it's support until it isn't. On the weekly time frame, we have a big wick, so I marked out the 50% level. That aligns with local range lows, higher time frame support, and the lower part of the potential range. That's where I'll look for the next setups. For the short, I would also accept another SFP. But if we see local signs of strength, I'll close it early to secure more profit. If price starts to reclaim the 6-hour order block, then the next step is to see whether it loses or holds that level. If it holds, there is simply no short, and I need to wait for new data. I'll most likely update everything on Telegram, just like I did with the long and the short over the last days. With that said, I hope this was helpful and useful. Wish you a nice day, and see you in the next one.